are day 2 here at the BMO Metals and Mining Conference, continuing our coverage, and my guest now is Clive Johnson. He's the CEO of B2 Gold, an intermediate producer that's really leading the pack here amongst the miners. Clive, welcome to the show. I don't know how you have not been on for the past 10 years I've been doing this.
I know, I was trying to figure it out myself.
Well, welcome to the show. Happy to speak with you. Great stock performance here, up 35% since September. You've been between the 2 and 320 point for the past, 32 months. Are you on the verge of breaking out from this range here?
That seems like it. We had a very successful growth of over 10 years of dramatic production growth since we founded B2 Gold just 11 years ago, and put up some of our own money, our group, and created the company, and had zero production 10 years ago. Now we have 5 gold mines in production in 4 countries, and we're right just below the 1 million ounce a year level at very profitable gold production. So it's been a time of dramatic growth for several years, and now I think our shareholders are starting to see the net result of that, and we had a truly transformative year in 2018.
So you're in the Philippines, you're in Nicaragua, you're in Namibia, you're in Mali. Is Mali really the focus here with the Fekola mine, or?
Well, they're all, we have 3 core assets, and that would be the Otjikoto mine in Namibia, the Masbate mine in the Philippines, and the latest mine, the one in, as you mentioned, Mali, Fekola, which is our largest mine. But those 3 mines are really the driving force. We have a couple of smaller projects in Nicaragua as well. But the growth has been driven in the last year or so by bringing Fekola into production 3 months ahead of schedule, on budget. We're a very strong technical group, and we do things like build our own mines, and I think that's one of the great reasons for our success.
It's interesting, you're looking at the list of countries. I mean, looking at the list, you would think these are not easy jurisdictions to be mining in. And how do you pivot and change the mind frame between each country?
Well, I think what we bring is what I call an extension of the Canadian culture. We treat people with fairness, respect, and transparency around the world, and ultimately it's about accountability. Before B2 Gold, I was one of the founders of Bema Gold, and we built Bema Gold from zero to a significant gold producer that was taken over by Kinross in 2007 for $3.5 billion. So we started B2 Gold as the B2, the Bema 2. But the key to all that time, because we were in Russia and South Africa and Chile in the Bema days, and now we're in all these different countries now, I think the real key to managing political risk is really quite simple at the end of the day. They're all different. But one of the key driving forces for us has been delivering on the promises you make. If you sit down with the president of Nicaragua or Mali or Namibia, as I've done face to face, and you promise that you're going to build a mine in a certain period of time and you're going to create jobs and pay taxes, these politicians, they believe you that you're going to do it. And I think that if you deliver on the promises you make in life, but also in business, you make a lot more friends than enemies. So we've been able to go to these very different cultures and countries and jurisdictions. But the key is to understand their culture, understand their country, and understand that you need to treat them with respect, and you need to deliver on the promises you make. If you promise a politician all these great things you're going to do, and he promises his citizens that, and it doesn't happen, sometimes that's where companies run afoul of governments and get increases in taxes.
Does that happen more often than we know of?
Well, there aren't that many CEOs that are going to sit with you or their shareholders and say, we're having a problem with this government increasing taxes because we screwed up. So at the end of the day, I think it's about accountability, and I think that's sadly one of the real things lacking in the gold space for far too many companies for far too many years, has been not delivering on promises to shareholders or promises to governments. So these countries all have different challenges, but the common theme is the way you treat people, and these have to be win-win deals. We have to make sure that everyone in the context of building a large gold mine, including the citizens of the country, truly benefit.
Clive, you're close to becoming a 1 million ounce producer here. How far away are you from that goal, and is that really one of the main drivers for you, hitting that mark?
Yeah, I don't think we ever set goals in that per se. One of the dangers of setting goals in terms of ounces of production is you might do a not so great deal to get to a level you targeted. We're driven by opportunities. We always have been. So when we find a good opportunity, the way we can go and build a mine that adds value to our shareholders and do it well, and also we add a lot of value through exploration. But I don't set those kind of goals in terms of specifically targeting ounces. But we have a pipeline now. We've achieved this level of close to 1 million ounces a year. I definitely see us continue to grow our production profile. Right now, the focus is expanding the Fekola Fekola mine. So late March we'll come out with an expansion study that is going to be very accretive to spend another $50 million to further increase the size of Fekola. That could take us over the million-ounce level. Also, we have a project that's in Colombia in a joint venture with Anglo Gold Ashanti that's really becoming of interest. It looks like the economics of that project with some additional studies we've been doing look pretty interesting. By the end of March, we'll come out with an economic analysis of that. That could very well be the next mine that we build that could be in Colombia. So we have a pipeline of projects that we want to get value for. We will ultimately always look at potential mergers and acquisitions as well. But I say the driving force right now is what's in our pipeline.
Clive, finally, we are at this conference that has always been a gauge or a barometer for what the rest of the year should shape up to look like. Lots of excitement with the new Mom Barrack news. What's your take on that first?
Well, it's interesting. I mean, I've been known to, I guess, to do the odd bold deal in the history of Beam and B2 Gold. So I'm a fan of bold moves. Okay. What Barrack's doing, was definitely Barrack Randgold was a bold deal. The Newmont concept in that deal is an even bolder deal. I'm not sure. I mean, I wish them all the best. What we need in our industry is more success stories. We've had too many disappointments over the years, and hopefully the industry is now changing and becoming more responsible. At the end of the day, the bottom line is we need to have accretive growth. We need to have growth not for growth's sake. We need to have growth that improves profitability. So it's going to be fascinating to watch these two giants square off and see what ends up coming out of it. At the end of the day, we're going to be very focused on our approach, and our approach is we will never acquire anything that requires a higher gold price and or exploration success to justify the purchase price. That's a strategy we've had for 30 years, and that's one of the reasons I think we've been one of the most successful, if not the most successful growth gold company in this space for quite a long time.
And how about on the gold price front? We're seeing excitement enter the space again. Do you think it's here to stay? Is it more convincing this time around?
Well, I think at the end of the day, we have the luxury, or have earned the luxury, to be ambivalent about the gold price. So our all-in sustaining costs will come out with our final numbers on March the 12th, but we're looking at being at the lower end of our projected level of all-in sustaining cost per ounce of gold of $780 an ounce. So today's gold prices were highly profitable. Last year we set this record of production. We tripled our cash from operations from $150 million to $450 million and paid down $220 million of debt. So we're in a very strong position here, whatever the gold price does. So we're covered on the downside because we're a low-cost producer. We're highly leveraged to gold. But I've never been a gold bug. I've never believed that gold has to go higher, because I think as a CEO of a gold mining company, that would be a dangerous thing, because you could potentially do a deal that wasn't great because you're thinking gold's going to save your butt by going higher. We live in the real world, and the real world is what the gold price is doing today. So at the end of the day, having said all of that, we're extremely leveraged to the price of gold. For every $100, if gold goes up, for every $100 gold goes up, it increases our cash from operations annually by $100 million.
Well, you might just be a rare breed in the CEO space for thinking that.
Well, I think we do need some conservatism as we approach this very challenging business.
Well, I wish you luck, and thank you for coming on the show, Clive. It was a pleasure speaking with you.
Real pleasure to me.
Yeah, and thanks for watching. We'll have much more for you on Kitco.com.